Hi traders, Nathan Bray here from ACY Securities. Well, as part of our 5 unique trading strategy webinar series that I'm hosting, I've had a lot of feedback, but as promised, I'm going to focus today on explaining in more detail strategy number 1. Okay, so this is the dynamic intraday support and resistance strategy. Now, this strategy is ideal for isolating intraday opportunities of changes of direction in line with trend, folks. So I'm going to show you how that works. And it's also, I guess, ideal if clients are looking to focus in and out in a particular day or days, or they're looking to trade off the open of a particular market. For example, they want to look for setups around the Tokyo time, the Frankfurt, London, or New York time. So it's a really specific intraday and dynamic trading strategy. So let's get into it. If you have any questions or queries, I'll put a link in the description below. Feel free to like and subscribe, of course, if you like what you're seeing. But our own senior market strategist, Duncan Cooper, will provide you all the ins and outs of this particular strategy. If you still have questions, feel free to come into our live webinar series and you can ask Duncan directly. So let's take a look at the dynamic intraday support and resistance strategy.
Okay, traders, so we're having a look at how this dynamic intraday support resistance strategy actually looks on your chart. So what you're seeing here, you'll be able to have on your Metatrader 4. So all the indicators are set up as a profile. We provide that to you and you can drop it in. They'll even help you set that up. So that way your screen will look exactly like mine does now. So what I'm going to do is squash the screen in so you get a concept of what's on the screen and why it's important. And then we'll go in part 2, we'll go in and show you examples of the setup that triggers you into a trade. Okay, and the concept behind that. And we'll look at a couple of examples. And then to finish off with, I'll actually go through and we'll have a look at the market as it stands today, just so you can get an idea. Because often the setup looks different to when you go back in hindsight and have a look at it. So it's really important to get it right as the setup to trigger you into a trade is working. So first of all, let's have a look and show you what's on the screen and why it's important. All right, so I'm going to double click and squash the chart in. All right, so the chart will look very different, but it's so you can see, first of all, the dynamic pivot lines on your screen. So what you're looking at here is these red lines, and you've got the black lines, and then all the way down the bottom, you've got these green lines. It's fairly straightforward in that the red are deemed as intraday resistance levels for intraday trading, and the green ones are deemed as intraday support levels. Okay, and right smack bang in the middle, rather than it be a squiggly moving average line, we've got what we call the central pivot, and that can be thought of as the average for this particular intraday trading setup. Okay, so that way we get an idea of what trend is doing and is the intraday trend actually going higher or lower. We can use this as a guide. We can also use it as a guide to either look for buying opportunities in an uptrend or shorting opportunities in a downtrend. So the dotted line there, the central pivot, all the other pivots you deem the same, okay, when it comes to the setup. However, we do look at the red ones as a level of potential intraday resistance for the day, and the green ones as intraday support. The other thing you'll find on this chart, if we look right down the bottom, is it tells you just as each market's opening around the globe. Okay, so right now we're a few hours into the Asian session, and if I look back a few hours ago, remember we're just on a 15-minute chart here. We can see the Tokyo Open. And the Tokyo Open is also the time that the pivots, because they're dynamic, redraw for a new day. So you'll see they all bend and reset for a new day. For example, yesterday, the central pivot was here, and then it redrew and it shows you a lower level for the central pivot today. okay, along with all the other pivots. That way, when it does redraw, it starts a new day, you're using those levels as your guidance, okay, for intraday dynamic support in the green or intraday resistance levels in the red. Now, the other thing I'll look at here that we have on the screen is it's called today's projected high indicator, and it's blue, and today's projected low as well. So these are really used as a guide. So for example, if price was to rally up and I'm in a long position, just to use an example here, if it was to rally up and I'm risking, say, 10 pips, I might say, well, maybe if price gets up to today's projected high, which is also up at a intraday potential resistance pivot level, right? Maybe that could be a place I might either take some profit, get risk out, or close out my trade completely. I'm using them as guides. If, for example, a buy trade sets up here, maybe I'll say, I don't know if I want to buy for the day and the day trade that high, because I am up at some intraday resistance levels and also up around today's projected high. So I can use them as guides for both targets, or I can use these as guides for what opportunity I'm going to enter and why. All right. So I'll put this chart back to normal. The only other thing down the bottom, we just use a MACD with histogram here. But I'll show you that in a moment when we go and look at how the setups work. So just double left click and you'll see the chart now goes back to how it would look before I sort of squashed it in. All right, so the other thing I'd really consider is I tend to use as a guide, you'll see down the bottom here, it tells me where the Tokyo market opened. So you'll see price is going a bit sideways, and then all of a sudden Tokyo's opened and price started to move down pretty rapidly, okay? The same thing can happen just as we have the Frankfurt open. When Europe wakes up, lots of orders could flow into the market, okay? And therefore you could see a lot of volatility or an increased amount of movement or direction as a result of that. So as a trader, especially traders who trade the open of major markets, this is a really helpful tool to have on your screen. And then, of course, an hour later, we get the London Open as well, okay? That, of course, is followed hours later by the New York Open. And you can see price rallied all the way back, all the way up until we got to this New York Open. And then we got a pretty significant sell-off as well. So that's why I'm using these types of indications on my screen to know the type of trading setups I'm looking for intraday. And of course, market openings can have such a big influence on that. Okay, so let's go in and have a look at trade setups. The first one we'll do is look at, if I'm looking off these dynamic pivot levels, if I'm looking for a buy. So the example I want to use is, let's go back and look at the Aussie against the US dollar. And you'll notice this is an example here. So you'll see it all looks very similar. If I was to click onto the euro yen, if I was to click on the euro dollar, I mean, I can put other markings on there, which we'll get to in your education, but you'll see the overall pivots look very similar. So looking at this Aussie dollar, it's a 1, 2, 3 solution here for your entry. So if I call it the 1, 2, 3 punch, that says you can enter into this particular strategy either on a buy or a sell. And what we're looking for is 3 simple things. The fact that there's 3 suggests we don't just want to enter because one type of intraday thing happens. We want a confluence or agreement to suggest to us that there's a change of direction occurring. The issue is, because we don't have a crystal ball, we don't know how long that change of direction is going to last for. So the first step in a strategy is to identify that there is at least a change of direction occurring in the market. So the way we might do that is we'll draw a trend line in, but we'll draw a trend line in using swing points. So on the buy side, it's a very simple process. We look at the candle, and as long as the 2 candles on either side, so you'll see this blue candle here with the big spike, as long as the candle to the left is lower than the high of this candle, and the candle to the right is also lower, so both of these are lower than that one, that is deemed as a swing point, okay? And if we move down, you'll find another one occurs here. Okay, so that spike there, the candle on the left is lower, and of course the candle on the right is lower. So it allows us to draw a trend line in across these swing points. So let me just do that. It's very simple. It does take a little bit of practice to draw your trend line in, but let's just say we're looking at price like that. So we've drawn a trend line across this swing point and this swing point down. And as you'll see here, all I'm looking for is for price to actually go up, which it has, and break that trend line. Okay, very simple. The second thing I want to do, and I only want to do this if it shows me that it's respected a pivot. Doesn't matter what color, it doesn't matter where, but I'm saying this is the trigger to entry. So you'll see here, price comes down and it can't get below this black pivot line here, okay? Then I draw in a trend line and say, okay, is price breaking this trend line? And then the third thing I'm going to do is wait for this MACD to cross up. So if I just move this forward a bit, you'll see here, price actually did break the trend line here, and look down below. Blue line's crossed up. So we've got a MACD cross, we've got a trend line break, and of course we've got this pivot line being respected. Okay, that is the 1, 2, 3. I'll just repeat that again. So you've got number one is the pivot being respected. If, for example, I'll just use example up here. If price was to go below this pivot here, this central pivot, and then back above it, we would say price isn't respecting the pivot. Okay, it's trading below it, it's trading above it. Whereas this one here, price goes down and it closes, it tries to touch this pivot, but it stays above it. Okay, that's what we mean on the buy side of respecting a pivot. So you'll see if I look to the left here yesterday, you'll see price was going below the central pivot, back above, back below. There was no real clear respect of that particular dynamic pivot going on. So this one is. The second thing is we draw in a trend line. Okay, so pivot line is respected. The trend line we've drawn in has broken, and our MACD has crossed up. So this 15-minute here is your entry. So that's effectively what we're doing, is we're looking intraday for changes of direction using a confluence of three things to confirm that the direction has changed. Okay, so if I was to just put in an imaginary trade here, so let's say we entered here, right? That's our entry line. I might say, well, I'm going to put a stop below that lowest point, maybe 2 pips below. So let's just do that too. And I could measure that and say, all right, from entry, I'm risking, say, 12 pips. Let's say I'm going to engage a 2-for-1 risk-reward type scenario. Then I could go, all right, well, I'm going to target 24 pips or 25 pips, and I could put that level in. But I could also use the central pivot, for example, to say, oh, that might, come into effect. So I've got some reasons. Where is today's projected line? Maybe the market, if I look up, I could say, well, this dotted red line, okay, it's called the figure, and it's at every 100 pips. But I'll also use that too and say, well, where is today's projected high? The people are happy to pay, say, 65, but if it gets up to 66, maybe that is a spot I'll take profit. So this strategy is really designed. I mean, you can trade 1-to-1, you can do any type of exit you like, but these tools are here for you to use. So let's just move this trade forward. You'll see price runs up. It gets to, as I suggested, the central pivot where it does close above it, then back below. then back above, and then look what happens. The Tokyo market starts a new day and it fails back below. So this is where you can use these as guides to say, well, up here, I'm going to take profit out of that trade. So if I measure the risk was about 12 pips, and from that entry, let's say we just went to the central pivot, we could have easily at this stage got to 24 pips. Okay, so that is in effect a target of very, very close to 2-to-1 or a fraction more. Okay, but if we move the chart forward and we still got our stop down here, once we were up 2-to-1, we could have moved our stop, and we could have moved that stop up and put it here so we couldn't lose. And yes, we did get a pullback at that central pivot, and then price continued higher. And I guess one of the other options too is to look at, when is this pivot level being respected, and do we get another change of direction and a potential opportunity to get into another trade? So you'll see this is in effect what we're looking at. So from that entry, over the next sort of 10 to 12 hours, we ended up, from our entry, about 56 pips with a 12 pip risk. So we're looking at sort of very close to 1 to 5 there, all inside one day. However, price then sold all the way back off to our entry point. Okay, it has never got all the way down, but you'll start to see where we're using these levels with our trading. Now let's take a look. So now that is your buy entry. So we've got a trendline break, respect to the pivot, MACD cross. Okay, let's look at what it looks like on a short trade. And to do that, I'll use the one we were looking at yesterday on the Aussie yen. So this time what we're doing, it's almost the same in reverse, and we'll use the example yesterday as using the central pivot. And if we go to the day before, you'll see there's another pivot level up here. So I'm going to show you both. So very simple scenario, price gets up and respects the pivot. So at this point here, we could have already had a trend line drawn in across the swing points here. And we have our trend line drawn in, price goes up, respects this pivot, doesn't close above it, touches it, comes down, right there we get a trend line break, pivot respected, trend line break to the downside. And if we look down the bottom, I'll just make this a bit bigger for you. The MACD blue crosses down below the red. So all three things are happening right here. Very similar scenario. If I was to then assume that's where you could have got in, we'll go off the lowest point for that 15-minute candle after the MACD crosses down. The trend line was, of course, already broken, and the pivot was respected. Okay, so that's your entry point there. If we just put a stop above that previous high, so we'll call the stop level there, and our entry level here. So once again, we're risking about 12, 13, let's call it 15 pips, okay? And then from there, price starts to correct and it moves down. In the next few hours from your entry, it was actually moved down about 33 pips. So there and alone, it's a 2-for-1, more than a 2-for-1 risk-reward ratio to the downside. Yesterday, so last night, price rallied back up to the central pivot, okay, which if the trend is down longer term, but you don't need to know that with this strategy, then you might say, well, that moving average, it's almost like a moving average goes up, it touches it, and then it continues in its trend direction. So this is another example from last night for the sell side. So if I go off this swing point and this one, I'll draw in the trend line. Price here is up, touching, and you can see it doesn't close above that central pivot line before eventually this trend line gets broken to the downside. Our MACD is crossed down. Okay, so that blue's crossed down. We've got a trend line break, and we've got a respect of that, in this case, the central pivot. And from there, we could have put a 10 pip stop in here. You could do less. You could go back and say, well, I'm going to put it above the previous high level for the day, which is a 10 pip stop or 11 pip stop level. And price then moved down 64 in a matter of hours. So in effect, you're looking at well above a 2-to-1 risk reward ratio. This could have been 5 or 6-to-1. And of course, you could have used the fact that buying support might have come in as it got down to a green pivot, maybe at a figure again. So it's down around 97. It's below 97 now. It's down at a green level. Maybe because I've made 5-to-1 already, I'll exit this trade. So this strategy is designed to find changes of direction using the dynamic support and resistance levels, and also using the indicators to work out where price can set up for trades each day around market open levels. So I hope that provides some insight into why this is useful for intraday trading. So let me just now put that back to how it would look. I sort of squashed it in a little bit, but you can see there how simple it was. If the trend was down, prices rallied back up. For people using fib, they could draw in a fib and combine that central pivot for perhaps a 62 retracement of the day. You can start to find multiple reasons. And of course, all of those things are taught by our senior market strategist, Duncan Cooper, and he'll look at the market for you live and explain that to you as well. All right. So to finish off with, I just want to now go through live to look at examples. What I would set you as homework, if it's something you're interested in, I would say get it set up on your platform, go through and watch the lesson, or you could rewatch this video. And then right around a market open, I would look at drawing in your trend lines and trying to find levels that are being respected, and then drawing a trend line ready for that market open time. And of course, if I just click across now, there's 12 that we could look at. So I'm going euro yen, I'm going euro dollar, okay, I'm going pound dollar. I'll just change it to this 15 minutes. So there's all different sorts of opportunities. Right now, nothing's really setting up on this pound dollar at this point. But if we did get a rally back up to this central pivot and it was respected, we could draw in a trend line perhaps for a sell trade on that. Let's start at the, let's go dollar CAD, which we're looking at. So when we started off, we're looking at this dollar CAD, and as you can see, it's day by day, it's putting in lower bottoms, rallying back up, put in a lower top, takes out this bottom. So the trend is down. So now we're seeing price rally back up, respecting this pivot, okay? So if I saw that, I could come in and draw it from one swing point to another, and we get a MACD cross down, and this trend line is already broken, probably by half an hour. So at this point here, that might trigger us into a trade today, and we could put obviously a stop above the previous high, and we could target down to the figure, which would be an 18 pip target, whilst only risking say 6 or 7. So it's very much a 2-to-1 type ratio. All right. So I would be looking at that as a setup, but keep in mind, I would be waiting until this afternoon and this evening when we get Europe come online and we get UK come online. Okay. Now I appreciate this is you do obviously need to take in other factors which could be happening, like major data events. I know tomorrow morning 6 a.m. we've got the FOMC statement, interest rate announcement, etc. But could there be intraday trading opportunities that you could trade leading up to that using this dynamic intraday support and resistance strategy? I'll just have a look and go live so we can have a look at any others that might be setting up. Dollar franc here, price is going above the pivot, it's back below it. So at this stage, there's nothing really clear yet, but it is a 15-minute chart. So you come back in an hour, it'll look different. Price did rally back up here on the dollar yen, so it did respect this level. So if we were to say, right, that level's respected, and drawing in a trend line just to go off that swing point and this swing point, I could then say, right, I've got a trend line break, this pivot's respected, and then my MACD has crossed down, okay? So that, in effect, could be a setup, okay? So I'm trying to just look at this as live so you understand what it might be like. Intraday trading, if you're looking at intraday setups, you could use other instruments as well. So, but we'll go back and just recap the strategy. So I'll give you now a couple of minutes just to recap on both the buy and the sell side. So squashing it in, what you're going to have is these dynamic pivot intraday support and resistance levels, as well as the average for the day as the central pivot. So what we're looking for is using these levels to see when they're respected, and then a change of direction occurring, which is confirmed by a trendline break as we've drawn in, and a MACD cross. And that gives us a trigger to just enter into that trade. All right. These were examples over the last few days on the sell side. And of course, we were looking at setups on the Aussie where price was being respected a couple of days ago. Okay, down at this pivot, trendline break, MACD cross. Okay, so what I would be saying to you is this particular strategy is ideal for traders who are looking to be able to look for multiple instruments all lined up at the start of a market, and having a process of entry, saying I need this 1, 2, 3 things to happen, and that will trigger me in to be able to trade the market, as opposed to not having a strategy and just saying, oh, I'm just going to jump in because I feel like this might happen or that might happen. And I would say to you, this particular approach can certainly make you a consistent trader. The question then becomes, based on your risk reward and other factors in the market, over time, does that become consistently profitable for you? And I would recommend, of course, people, when you're learning this, feel free to utilize the skills of someone like a trading mentor like myself or account manager to do trade reviews for you, and do it either in a demo account or use micros, for example, in a live account where you're managing your risk losses to a couple of dollars. Okay, that's all from me, folks. I really hope you've enjoyed this more detailed explanation of the dynamic intraday support and resistance strategy.